Extreme bullishness triggers stock pullback. That's right, I did not misspoke. If we are very, very bullish, there is a very strong chance that a pullback will unfold, and I will show it on the chart using what's called a put to call ratio. Short-term and long-term correction targets, we'll also discuss that. Crypto pretty much collapsed, and we will see where this could end. We will look at Solana, Ethereum, and favorite Bitcoin. And the dollar strength finally pushed higher, and the precious metals have finally felt it pretty badly. Silver is on the brink of a bear market. I'll show you all of that. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 5th, 2026. Don't forget to hit the like button, share this video, make a comment, put a thumbs up into the comment section or a smiley face. This is what keeps this channel going and makes the algorithm think that this is a valuable video. It will show it to more people. Thank you for all the comments and the likes I've been getting. I really appreciate it. Please keep them coming. If you're a subscriber, stay tuned. We have a relatively small video for the members only. We'll be covering some of the ETFs, some of the large cap stocks, and some of the speculative securities that we have a position in or alerts were sent recently. So looking at stocks right now, S&P 500, pulled back from the record highs. So we have set a record high, on Tuesday of this week, Tuesday the 2nd of June, and now we have pulled back. Still record highs are, the dominant theme here. We want to be looking at it in a slightly bigger picture, but I will show you that yes, indeed, we were extremely overextended, and the sentiment was extremely bullish. And here's how I know. So, looking at this chart, this is a put to call ratio, and I have shown this chart many times in the past, but here it is again. So think about it backwards. When there are too many puts, so put is bought when people think that the market will go down. Call is bought when people think the market will go up. In this case, this is a total put to call ratio for the, I believe, for NYE, I believe, okay, well, this is traded on Chicago Board of Options Exchange. So this is a total put to total calls. So how many puts at the top, calls on the bottom? We divide in puts by calls. So when there are too many puts, we have a rally that seems likely. So for example, here's a great example that occurred back in April, May of 2025. April, May of 2025, right there. Yeah, we were extremely bearish at that moment. And the market was, thought that we're going to go to zero. In other words, there were way too many puts. Too many people thought that we're going to collapse to nothing. What happened afterwards? We actually rallied. So now we have the opposite situation. We can look right now and we can see that I wrote here, this is from my subscribers, absurdly large number of calls, pullback likely. And I actually wrote this on this dip, which was like in early May. And we got a little tiny dip right there. This is like 4 days of pullback, but not really anything huge. And then we actually made another high. And now we made another absurdly large number of calls, and finally this condition of way too many people thinking that we're gonna go through the roof and then to the moon, and pretty much everybody, your mother and your grandmother, also thinks we're gonna go through the roof and to the moon. This is exactly the type of conditions when we say, okay, this is something to reconsider. And yes, we're finally seeing some sort of a pullback, like a reasonable size pullback. But in the context of this entire, run up from even the recent prices, like for example from March of this year, we're still, a few percentage points away from record. So not even a big deal, so to speak. Now we can get more granular and we can look at the 4-hour chart to see where this pullback will take us. So here's, for example, 4-hour chart of the basically S&P 500 futures. So on this chart we can see that we have indeed broken below this green support resistance line, and notice that we haven't actually touched that green support resistance line since way back in April. So this rally has been extremely strong, and we just continued higher and higher until we finally hit records here in June on June 2nd, so a few days ago, and started to pull back. But today this pullback was really sharp, and you can see there was barely any stopping it, so it just continued to the end of the session. So in other words, we traded near the bottom of the session. I mean, near the close. At the close, we were trading near the bottom of the session. On this chart, so the first support for the 4-hour chart was already blown through. Now we have a second support for the 4-hour chart, which is at around 7,286. We can correlate that to about this green support resistance line on the daily chart. This is a daily chart. So each candlestick is a day's worth of activity. And it's reasonable to see, to get at least a attempt to stabilize around this green support resistance line. Again, you can find out more about them by going to the link in the description. These are my lines on the chart. My indicator lines. You can have them on your chart for trading use a free indicator platform. So I think at the very least we will retest this blue support resistance line on the 4-hour chart, which is another, probably 1% or so away. About 1% away. So that is not a big deal in the context of this entire rally. And at that point, we will see, okay, are we trying to at least stabilize around this area? If we are going to stabilize, then we might actually get another rally, another attempt to go higher. Now, there is also a possibility that we're drawing out what's called a head and shoulders. So here's the left shoulder, here's the head, and the right shoulder, if it comes up, it needs to be lower than the head. Okay, is this actually going to happen? There's no way to tell. But if it does happen, then it's possible we're actually rolling over. But for now, I don't see huge warning signs within the breadth, except for this put to call ratio, but this is a sentiment. We have way too many people who think that the market is going to go higher and higher, and as a result, quite often we see the opposite reaction. So this put to call ratio is actually somewhat useful indicator, especially when the readings are that insane. And we were really quite overextended in calls direction. So this is my short-term prediction. Longer term, if this continues, then I think we could continue lower, at the very least towards this blue support resistance line. So we're looking for another maybe 5%. But if we get to this blue support resistance line, it would imply an oversold condition, and many people, many traders, especially longer term ones, will become very interested. For example, I will become very interested because I like more longer term positions, more like swing trades rather than scalps or small trades. So if we drop another 5%, then it will become a strong buy if anything, for S&P 500. So for now, let's just wait and see what happens. I think, Monday, Tuesday, we most likely will retest this level of around 7,200. Oh, actually, let me give you the exact number. 7,307. That's for S&P 500 futures. So yes, we can definitely get there within, probably next week. This drop also was extremely steep, extremely precipitous, so a bounce is actually quite likely pretty soon. But, with the market, it's like there's no way to tell. It's like a painter. Today it decides to paint this, and then tomorrow it decides to paint something else. So no way to predict. But based on my experience, based on my reading of this chart, I think it's reasonable to expect another 1% down before any kind of pullback or before any kind of bounce will even begin to materialize. Okay, let me know in the comments if that makes sense and if you needed more information about that. We are currently looking at Bitcoin. It's a very interesting, like this MicroStrategy. I think it's called Strategy. Yeah, there it is, MicroStrategy. I don't know, for some reason, the person who runs this thing thought that Bitcoin is somehow different than any other asset which has candlesticks. And notice that their company is in the dumps right now, and they're correlating very well with Bitcoin. So I don't know why people think that. I think pretty much if you see candlesticks, you can think in terms of, trading, not in terms of, oh my God, this is the new best thing since sliced bread, probably. So right now we're seeing a new low right this instant as I'm describing it. Today we made a new low for Bitcoin at around 59,000. And if we look on the weekly chart of Bitcoin, then we can see that I actually told about this a while back. So when we made this low, actually no, right there, when we made this low on in January of this year, it was around 76,000 for Bitcoin, and we retested this low from April 2025. I actually wrote this. 53,000 price target if April 2025 levels do not hold. So April 2025 levels are somewhere here, and obviously they're not holding. So my estimate is at the very least we will drop towards 53,000, but I am not sure we will stop. And just the way this thing is selling, it seems like it's not really gonna stop there. We can actually look at Ethereum. Ethereum is also retesting the lows from April, although the chart looks somewhat different, but Ethereum looks quite a lot weaker, because if this April lows from 2025 do not hold, then we are gonna collapse towards like June 2022 lows, which is like 847 and possibly lower. And another one that we're and another one that we are monitoring is this, and this is Solana. Solana is also in a bear market. Correlations are very high with the Bitcoin. This thing broke down actually earlier. This thing broke down in February already. So notice that this lows from 2025 did not hold. Today we actually made a new low. We're closing below the new low. And for Solana, I think a good estimate would be around $22, which is this area here from 2023. So I'm almost positive we're gonna get there pretty soon, or within next few weeks or so. Again, let me know what you think about the Bitcoin. All right, and now I think this is even more interesting topic, and that is, of course, euro and the and the currencies in general. So here's euro versus US dollar. So it's a currency pair. Currency pairs, and currencies are normally not traded in a vacuum. They're traded against something else because we are exchanging one currency for another. So euro is currently in a downtrend. Euro on top, US dollar on the bottom. US dollar is getting stronger. How do I know? Because notice what happened. We moved lower in favor of US dollar on the bottom. Okay, so we entered a new bear market on right there where I'm hovering on 19th of May 2026. How do I know? All I need to know is just look at my indicators. If a currency closed below this red support resistance line right there where I'm hovering, that means it's in a bear market. And we need to think about selling it short. And to sell it short is ideally like when it touches the red support resistance line and then closes below it. So pretty much, any of these opportunities that were recently when we touched the red support resistance line and then closed below it, they were, valuable. You could have taken them. Today, finally, we saw a follow through to the downside. It's a significant move from just recently, so it's close to 70.77%. For a currency, it's quite a bit. And I think this will continue. I think euro will continue lower, and by extension, dollar will gain. So let me show you the dollar currency index, because it's easier to think about that in those terms. So here's the dollar currency index, and I'm going to make it a little bigger. Dollar currency index broke out into a new uptrend where I'm hovering on 30th of March of this year. It pulled back very sharply. In fact, it retested this red support resistance line on 4 different occasions. Yet we never closed below it, and we continued to kind of find support there. We noticed that price kind of bounced off of it and then rallied. Again, came down, bounced off of it, and then rallied. And then here on 14th of May of this year, just a few weeks ago, we saw yet another breakout above this blue support resistance line, which confirmed our bullish posture for the dollar. And here I was pretty adamant about not trading gold and gold miners on the upside. I said to my subscribers that I would not be buying gold. I would be extremely cautious with gold and gold miners right now, and silver miners as well, because the dollar is strengthening. And as I keep pointing out, gold is traded in dollars, so I'll get to it in a second. But notice what happened with the dollar. It broke above this blue support resistance line, meaning that it confirmed the uptrend, came up, tested it again on the 29th of May, and then rallied strongly today and actually all this week. Now we're actually pretty much guaranteed to, we could trade sideways, of course, there's no way to tell, but I think the road up for the dollar is much easier than the road down for the dollar. In other words, I would not sell the dollar short right this instant. So dollar strengthening, what does it mean for precious metals? And I already said that. So for example, here is gold XAU divided by USD, so US dollar on the bottom. US dollar just got bigger, and it is pulling this currency pair lower. Yes, very much so. There is a big red candlestick. We're pulling this currency pair lower. We actually are now at the lowest level since March of this year. This low where I'm hovering from 23rd of March, if it's broken, I think we will already be below this red support resistance line, meaning that it is going to be a bear market for gold. Okay, so let that sink in for a little while. Silver was actually even more telling. Silver, had, just like gold, had a big drop here back in January. attempted to run higher. Notice this purple arrow up. This just shows that yes, indeed, we're seeing a signal to buy silver back in February, but I did not take it, nor did I send it to my subscribers. I was simply not sure if we want to be buying at this point. I was correct. Took a little while, but notice this rejection candle around 13th of May. The price came up to the blue line. It tried to get above. Actually, here, if it closed above, I might have said, okay, maybe we're still in the bull market, but no, actually it was a clear rejection with a shooting star kind of candlestick and a follow through to the downside. And now finally we're seeing a significant push lower. In fact, we can kind of zoom in and see where the silver ended today. I'm fairly certain we ended below the red line. So notice what happened. This is a bear market for silver already. So silver has officially entered a bear market today. Okay. What does it all mean? It just means that I would not be buying silver, gold, or silver and gold miners. I would be either doing nothing or potentially get ready to sell them short. Here's actually gold miners as well. Gold miners seem a little stronger, but they do follow silver and gold, because they're correlated assets, strongly correlated assets. So we're now at the lowest level since at least March of this year, possibly more, possibly even going back to like December of last year, 2025. And as I showed, if dollar continues to strengthen, this will continue to weaken and continue lower. So gold is in danger, and it is strange, but who knows? Maybe this whole inflation expectations are overblown, as it is quite often, as it happens quite often. So yes, we might see gold and silver continue lower. And I believe that's it for this week's recap. So head over to MasterChartsTrading.com. That's my website. You can get the same indicators, this green, blue, red, and yellow lines, for TradingView.com. So TradingView.com is a free interface. You register for free on TradingView.com. Come back to my site, Master Charts Trading, and then click on sign up one of the products. So trading indicators are just that. You can trade pretty much anything under the sun. You can also trade intraday, like for example, 10 seconds. How about that? Yeah, you can trade on 10-second chart. So for example, here's a breakout on a 10-second chart. And probably we'll see a rally once it opens. Or the opposite, here's the breakdown on a 10-second chart and a huge move in your favor. So yes, you can use my indicators on continuous securities such as futures, forex, intraday. It is more tricky, and you will get more. You won't get as much. How can I put it? You won't get as many positive signals because it's much more volatile when you trade intraday. So I personally prefer to trade on daily charts and have more of a swing type of trade. So for example, here's for S&P 500, that was the way to buy it. Here's my QQQ, the NASDAQ position that I bought in May of 2025. And I'm still holding half of it. So I sold half like back in September of 25, but I'm still holding half of my position because my stop is at the blue line. So there's still room for it to drop, or maybe it won't even drop that low. Maybe I'll just continue holding. Another option is to take some profits, but you never know. Like for example, here I was way too early, but what if I exit here? Will I still be early? What if it continues higher? There's no way to tell. So that's trading indicators. Newsletter, I send out daily alerts and weekly members only videos. for my subscribers. And for example, this week we'll be covering all of these various securities, including large cap stocks, ETFs, as well as speculative stocks. And the best deal is to get both trading indicators and newsletters. And this, the best deal, you can get the monthly subscription or the yearly subscription. Yearly subscription is 2 months free, so it's 17% off, or $49.95 equivalent of the monthly subscription. So consider signing up. You have a 7-day free trial. Always you can cancel, but I tell you, vast majority of people don't cancel, and I have clients that are going back many years since I started. That's it for this week's recap. Please don't forget to hit the like button, put a smiley face in the comments, share this video. Thank you for watching. Have another great trading week. Bye bye.